People ask me all the time, Selma, why you're still talking about real estate? Why you're posting about Dubai when there is a conflict next door? Look, it is real. There is tension. There is uncertainty. But here the truth nobody will tell you. Markets don't stop for crisis. They just filter out the tourists from the investors. People are panicking, but look at the prices. They haven't budged. Why? Because the UAE is a safe haven. That's been stress tested for 20 years. Everything is temporary, the good, the bad, and the fear. And history does not just repeat itself here. It rewards the people who stay rational while everyone else is looking for the exit. I believe in this country, I believe in the UAE, and I know it always comes back stronger. But let's be clear, that does not mean every investment right now is a win. The market has changed. Some areas that were booming are becoming risky, some neighborhoods are facing oversupply, and some agents will push these areas because they're thinking about their commission, not your ROI. I'm Salma Joual and I'm the founder of SG Real Estate. In this video, I'm going to show you where the real opportunities are and exactly what you should avoid. So let's start with one of the strongest waterfront opportunities right now. Dubai Island. This is the city's new main beachfront hub backed by Nakhil. There are 5 islands here: A, B, C, D, and E. Right now, there are 3 open for investment. Let me show you on the map so you can understand. Island A is the heart of the project. It's the most convenient and has the main infrastructure. It's where you'll find the main marinas and the primary souk. This is the hub for residents and tourists. Island B is quieter and more exclusive. It features limited residential buildings and the Nakhil Villa community. Many units here have private beach access, making it top choice for capital growth. Island C is the social and retail center. This is where the massive shopping mall and the largest collection of luxury hotels will be. It is designed for high footfall, which makes it the best spot for short-term rental yields. Island D is the strategic connectivity point. This is the gateway to the mainland. Island E is for the elite. It is 100% private villas, only for residents. This is a gated ultra-luxury environment designed for long-term wealth preservation and maximum privacy. This is not just a beautiful area, it is the biggest capital appreciation play in Dubai right now. In 2025, average prices here jumped by more than 20%. This is a clear trend we see across the major developers. For example, take a look at this chart. This bar shows the price per square foot for different projects by the same developer. You can see they raise the price every new launch. But the catch is, the newer projects are actually less premium than the one launched first, not because of quality, but because they are farther from the beach, and yet they cost more. This trend is not stopping because the area is in the early stages. With only 30% of the units sold so far, the biggest growth is still ahead of us. Those who buy now will capture all that value. Right now, the area is a massive construction site, but the essentials are ready. The beach is fully operational and very popular. We have the basic infrastructure, 3 active hotels, several marinas. In 2 years, this place will be completely transformed. But listen, not every project here is a winner. The unique projects are your best bet. There are boutique buildings or luxury hotels in a quiet spot with direct private beach access. We consider this the best investment because they have the highest growth potential. Take a look at this graph. It shows the 4-year price growth for projects with private beach access. They all grew between 80 to 150%. Why? Because private beach access is the rarest asset in Dubai. And on Dubai Islands today, you can get this luxury for much lower price than anywhere else in the city. One more thing, beachfront villas. Take a look at this chart. The blue bar shows average villa growth over 10 years, from 2015 to 2025, at 118%. But look at the yellow bar. This is the Palm Jumeirah beachfront. Those villas grow by almost 300%. The reason is scarcity. Beachfront villas are only 0.3% of all villas in Dubai. In the future, that drops to 0.2%. And top developers are pricing this at 4,000 dirhams per square foot. Now moving to another area that is still under the radar, Dubai Design District, or D3. This is one of the most interesting emerging areas in Dubai. With the new 18 million square foot master plan, which is roughly the size of downtown, the vision is to transform D3 into a mixed community with residential spaces, green areas, and cultural zones. It is 10 minutes from downtown and right next to Business Bay. This puts you at the doorstep of the biggest office hubs in Dubai. But unlike Business Bay, D3 is being designed for families and residents. It's more community focused. The developer is Miraz, and this is a huge advantage. Take a look at this chart. Miraz communities consistently outperform the market average, even when a concept changes. Like La Mer, the property values still grow by 50%. In Cherry Woods, we saw a growth of 75%. Miraz knows how to build areas where people want to live. Right now, pricing in D3 is still very attractive. It is much cheaper than downtown and priced lower than the average buildings in Business Bay. When you compare it to high-end tower in Creek Harbor, D3 offers a better entry price for much more central location. This is a massive value gap opportunity. It is not affordable area, but for a premium investor, the value gap here is one of the best in the city. Now let's talk about different type of investor. If your budget is more limited but you still want a high growth, then Dubai South is where you need to look. But you have to be very smart where to buy. The main driver is the expansion of Al Maktoum International Airport. By 2032, this will be the largest airport in the world, handling 150 million passengers. But for us as investors, the passenger number is not the most important part. The real number is 500,000. That's how many new jobs this expansion is expected to create. We are talking about pilots, engineers, logistic managers, and tech professionals. These people all need a place to live, and they want to live close to work. This creates a massive permanent demand for housing. But we do have a small problem. Most of the existing apartments in Dubai South are very basic. They are budget buildings that don't meet the standards that high earning expect in Dubai. This is your opportunity. Stronger developers are finally entering Dubai South. They are launching projects with better designs, better amenities, and much stronger concept. Take a look at the map. South of the airport, you have the Emar Villa communities. To the north, you have the residential districts. In these northern districts, we are seeing 30,000 apartment planned. But there is a major shortage of high-quality apartments. When you invest in premium projects like the one from Ellington, MTS, you are positioning yourself to capture the highest quality tenants in the area. Because the entry price is much lower than central Dubai, you can get both capital appreciation and excellent rental yield. In Dubai South, the win is not just buying any property, it's about buying the property that everyone else wants to rent in 5 years. Now for those who want stability and lower risk, we have to talk about JVT, Jumeirah Village Triangle. A lot of people compare JVT to JVC, but as an investor, you need to look at the most important number in real estate, supply. Take a look at this chart. Currently, JVC has around 80,000 residential units ready or under construction. JVT has only 18,000. This is a massive difference. In JVT, you have 4 times less competition. Less supply means your properties stay rented, your tenants stay longer, and your value stays protected. The location is also a major advantage. You are 10 minutes from Dubai Marina and 25 minutes from downtown. You are surrounded by the most expensive villa communities in the city, like Jumeirah Islands and Emirates Hills. This gives JVC a much more premium and comfy compared to other affordable areas. Now let's look at the yields. The numbers here are very strong for a stable area. We're seeing average rental yields of 8.4% for studios and nearly 8% for 1 and 2 bedroom apartments. And there is one more value driver you should know about. The Al Khail Mall is back under construction. For a very long time, the lack of major mall was the only downside to JVT. Now that it's finally being finished, we expect a new wave of demand and another jump in property values. If you want a safe, proven investment with high yields and almost zero risk of oversupply, JVT is the smartest move you can make right now. So let's go back to the beginning. Is Dubai real estate risky in 2026? Yes, if you follow the crowd or listen to an agent chasing their commission. But as we have seen, the numbers don't lie. Everything in this market is temporary except for the land and the data. While others are waiting for the perfect time to invest, the smart money is already positioned. If you want a portfolio built on math, not sales pitch, reach out to me directly. Let's find the project that fits your vision. I'm Salma, and I'm here to give you total clarity. Don't just watch the market happen, own a piece of it. I'll see you on the next one.